Thank you again for holding a quick presentation. Actually, the title is this one is the wrong one. On your agenda, you have the right one. I will talk about the euro on Ledger, but more on a higher level perspective. And additionally, I would like to talk about where would we go with tokenization, in particular, running such things on existing platforms. That's the presentation slide. You know it already. We work like Fraunhofer, like a research institute which is doing applied things. We're also doing consulting topics. And of course, we're doing being a platform and so on. I will skip this. You know this already. So what I would like to show you now is basically how asset management of the future would look like. What you have heard previously, for example, by Mikobo and by others, it's how this would operatively work. Azhos is also doing it from an operative perspective. So you have a silo, you have the ledger, you have the euro, and everything is connected nicely with integrity and high security. I would now take a different perspective, more like focusing on the high level or on a more broader perspective where this would go. What you see here is it's not a blue box, actually, that's Ethereum. But Ethereum stands like one word, like an asset management platform. It could also, that's very important, it could also be a consortium by banks which are jointly operating this kind of system. In this case, I now chose Ethereum because probably everybody knows it. And it's also nice to basically use this as an example because it would work. So why do we need Ether? Because we need Ether to pay for business processes which are organized on this on the ledger or on the Ethereum platform. So once we would like to move one STO, one coin from A to B, we have to literally pay approximately at current prices half a US dollar cent, so 0.5 US dollar cent approximately to the system, to the miners, such that our asset is getting transferred. So I send one asset from me to you, I have to pay 0.5 US dollar cent depending on the exchange rate, and then the asset is being processed and being transferred. That's the pure transfer function. We can also execute existing business processes. We have heard this. These are the smart contracts. Smart contracts can be really complex. They can resemble escrow accounts. They could organize dividend payments. They could organize loan payments and all other things. And once you are trying to execute these business processes, so you're running the smart contracts, again, you have to pay, say, a little bit more, say 1 US dollar cent into the system. It's going to the miners, and the system is then processing the business process. How do these smart contracts look like? Maybe some of you haven't seen these smart contracts yet. That's just one example. It's actually a very simple example. You see here the so-called transfer function of an ERC20 like contract. The transfer function is nothing else than a money transfer according to an IBAN transaction. You are calling the function, you're giving two arguments to the function. One is the recipient of the money, and the other one is, the other parameter is what is exactly the amount I would like to transfer to the recipient. And then you execute the function. You see here with the require, with the lines which are starting with balance off, you see that the sender is basically getting less amount. There is something subtracted. You see this at the end of the line, and on the next line you see that something is added to the recipient. So this is nothing else than a money transfer from A to B. So where we need IBAN transactions nowadays with servers here, APIs there, 40 years old infrastructure there, and so on, an IBAN-like asset transfer on Ethereum runs more or less in a very, very simple way with a programming language which is belonging to an asset management transfer like Ethereum. Why is this important, and why am I showing you this? Because any financial construct in the future, really any, will be reflected by these smart contracts, and also authorities like exchanges, like the financial market authorities. In Germany it's the BaFin. In the future they partly need to also understand and audit these contracts, because whatever is written in the financial prospectus will then be mirrored in exactly this programming code. Yeah? So it's basically programmed money, you know this term probably, and therefore I think it's worth it to see this. And asking the system to run this code costs money, so you pay, say, $1 in Ether to the system. This is how Ethereum works. Now people have invented the so-called ERC20 token. That's basically a format which allows you to interchange one token against another one. Only because the ERC20 format exists, you can then start listing it on tokens, because you then can exchange one token against another one. Now it's getting exciting because people have then, that was the past 24 months, people have invented the so-called ICOs. That's nothing else than a smart contract which is reflecting the functioning of a fundraising procedure of a startup. So you take the fundraising procedure, normally written down in 40 pages of document written by a lawyer, you code this into a smart contract, you execute it on the network, and then you can organize a fundraising mechanism based on Ethereum, which everybody knows. It's called ICO. That's the past, right? Now it's getting exciting because this is now what's happening these days. Companies are now, including JP Morgan, by the way, they are now starting to put traditional currencies, Euro, Swiss franc, US dollars, and other things, to put these traditional currencies on top of the base layer of Ethereum. So it's basically second-order cryptocurrencies, be it an ICO or be it the euro, it's second-order cryptocurrencies put on top of the first-order network layer of Ethereum. This is happening now. For example, you have a project called Stasis.net from Malta. They are running the euro on top of Ethereum. Why do you need this? Because now I can, from now, if I would like to do it now, it's a few minutes after 4, I initiate now a transaction sending 500 euro from here to mid of Africa. The money going from here to mid of Africa takes exactly 20 seconds, and this euro really arrives there. So 20 seconds around the world in euro, no crazy cryptocurrency anymore. Because, why is this? We are using, and that's very important now, we are using the Ethereum network as a transport mechanism on a worldwide level to let assets move around the globe in a controlled way without duplication and so on. This is now what happened. So what you see here is basically happening these days, these months. Couple of months ago, and the next month you heard about the Commerzbank, which will present soon. It's also about getting the euro somehow on the ledger, US dollar on ledger, and so on. And what's now also happening in the next couple of days and months, this is now going in the direction of what Mikobo just presented. People are starting to put all kinds of things on top of this layer. Again, please note, it does not have to be EOS or Ethereum. It could also be a consortium running by a couple of banks, for example. The Corda network, which is currently being built, could also be such a platform. Yeah, but I use Ethereum because most of you guys probably know it. So you can now start putting the stock on the same network. You could also put their loans, you could put their profit generation rights, or whatever you would like to have there. People are now experimenting with this. And since Monday, we now have some kind of loan on top of a base layer. That's basically the security token which has been granted by the BaFin here in Germany, which is really unexpected early. People would have thought that the BaFin here in Germany is allowing these kind of blockchain-based security tokens only later this year. But this is basically this is exactly what's happening here on the right-hand side. And if we now talk about tokenization of assets, then it's going even more in this direction, because it's not just stocks and loans, it's also cars, real estate, machines, and sensors, and everything else. This is also what Mikobo told us about a little bit. And now it gets really exciting, because if you have all assets on one platform, then you can start interchanging all assets with each other. For example, you can exchange, of course, Bitcoin against Ethereum. You can exchange US dollar against euro. You could purchase the Daimler stock for euro, or you could sell the, I don't know, Accenture stock versus Swiss franc. So you have all assets on this platform, and you can start interchanging with anything else. And of course, you can also include those assets which have so far not been included on such platforms. This could be private equity, this could be cars, this could be machines, because they will all sit on such asset management platform. So what you have then is basically seamless trading of all kinds of assets on one single platform. It's basically happening on a worldwide level with close to zero transaction costs. There are no intermediaries there on the platform, but you have banks, which are the gateways into the system. You also have exchanges as gateways into the system, but the system itself does not have intermediaries anymore. Then you have, of course, 24/7 runtime. It's happening all instantaneously, and there is no clearing and settlement. I think this is going in the direction. And now coming back to Azhos, where is Azhos in this example? It's nothing else than a machine on the right-hand side, but you have a silo there. And in case you are having a silo equipped with a sensor, then you know how full the silo is. Then you can tokenize it on the capital market, and then you can make it subject to asset management, and you can ask asset managers to invest in silos in Europe, or chemical silos in, I don't know, China. Yeah? Or you can have a mixed portfolio of all kinds of assets then being bundled together. And this is what I also then would like to add here on a higher level, because so far I have proposed that everything is running on single assets, you know, a car, a machine, a stock, and so on. But on a higher level, you can now also start grouping these assets. Similarly, as an ETF fund is structuring or collecting or investing in low-level stocks. Yeah, so ETF on the German DAX is purchasing 30 titles which are listed in the DAX. That's basically passive asset management, and you could also do this on the platform with all these assets included. Then you can have of course, a passive fund for stock or currencies. You could have, of course, a crypto fund. You could have a real estate fund on a higher level, which is investing on low-level real estate objects, where currently quite some startups are exploring this. You could have people or a fund investing in cars, and of course, again, from Azhos, the silos. So I think it's going into this direction, and now is coming, I think, something which is really far away. It's basically a combination of everything. This is nothing else than the robo-advisor of the future, which is going long in stocks, going short in cars, purchasing assets of silos, doing things in China or maybe doing things in Europe. I don't know, when Trump acts, selling stocks in the US and so on. So whatever happens, you could have one potential robo-advisor algorithm which on a higher level takes action, and on a lower level you have one platform where all kinds of assets are sitting. So now what happens then is, right now, you need to have a large bundle of assets such that you can list it on the capital markets. We call it IPO, or we call it a real estate fund. But the bundle of assets need to be sufficiently high such that it makes sense from an efficiency perspective to get these assets listed on the stock market. This is why a startup out there cannot go to a stock exchange. That's why there was this rush for ICOs, because there is some inefficiency in financing. What I think is happening in by blockchain technology is that you have the possibility that these setup costs for getting assets listed on the blockchain, that these setup costs are strongly decreasing, such that at the end of the day you could have smaller size assets, such that you don't have a real estate fund, but you have one real estate object. You don't have a company consisting of 50 machines, but rather you have one machine. You don't have a leasing company like Sixt or Hertz or Europcar, but rather you have one single car which is being investable, and you then group it on a higher level to funds. It will take probably 10-15 years, but I think quite strongly that it goes into this direction. By the way, we are currently also talking with one company which seeks to do the car transactions on the left-hand side. So the goal is to have an STO on a car, and with this, a car fleet for a car sharing company should be funded, because then the car sharing company can focus on IT and on growth, while the growth of the car fleet will be financed by the capital markets in theory. Let's see if this works. And then, and what I'm now saying is basically a quite shaky hypothesis. If now assets are moving to these smaller size assets on the left-hand side, price, then you wouldn't need these huge assets like corporations being listed on the stocks markets. You don't need them to the degree as we have it today, which should then lead to decreasing stock prices because the assets are moving to other types of assets which can also be investable in the future. But this is something for the next 10 years, and it's just a shaky hypothesis. But I think this is what blockchain is doing. It's bringing down setup costs to set up structures which can then be brought to the capital market. So what you see here is, as the CEO of Binance told us, that there should be millions of coins. Why is this? You don't have just 1,000 stocks and 5,000 funds, but additionally you have 10,000 cars, 50,000 machines, and every single asset is being individually listed on some exchanges, and people can invest in it. So there will be millions of coins out there. This is what the CEO of Binance expects, and actually I would also follow him with his argumentation. For this reason, for example, some of you guys might know it, we also wanted, from a university perspective, we wanted to contribute something and then set up a non-profit association, which we called International Token Standardization Association. It's a non-profit association according to German law, and the goal is here to first provide a consistent number for these assets. So far, we only have a couple of cryptocurrencies, but in case there will be millions of assets out there, we need to have better structures there. We also engaged in creating a token classification scheme, which I will elaborate on in a second a little bit further. And you see also the token base here on the right-hand side. The goal is here to provide a for-free database with daily data for prices, volumes, and other things, such that, for example, people interested in cryptocurrencies and also, for example, consulting companies can now start doing real data analytics, at least with aggregate daily data, to see which segments are increasing, which segments are shrinking, how many tokens do we have in a specific segment, and so on. So you need to have the data, such as consulting companies, researchers, and other people, for example, here in the room, would be able to do this analysis. This kind of association, we call it ITSA, is now being set up. We have a couple of founding members also in the room. For example, the German Banking Association, Bankenverband, joined. We have the co-creator of the ERC20 token, Fabian Vogelsteller, who joined as a founding member, and therefore I think maybe you are also interested in this kind of project. It's more like a standard-setting organization. It's not about earning money. How should it be? Because it's, as I said, by the statutes, a non-profit association. So I jump over this and this also. So some words about the token classification. What you see here is our first proposal of having 4 dimensions. So we have the green dimension, which is asking for the economic purpose. We have the red dimension asking for the legal claim. We have the dark blue dimension, which is addressing the technical setup. And we have the turquoise dimension, which is asking about the industry, which is exactly the same classification as we have it already now. Now you would call it SIC, that's standard in industry classification, or other codes. So we are trying to mimic this for the token world. So what you see here is nothing special. Other people have also done it. There are quite some token classification schemes out there, and we have tried to basically also be in the same vein to not be in conflict with them. But what we have done, what others have so far not done, we have also categorized 800 cryptocurrencies. So it took us half a year to go through 800 projects and also sort them into these categories. So for example, we have the so-called payment token. I think you know this term already. This is in our classification, it's the class EP21. And for example, the Bitcoin is a payment token. It's basically an unpacked payment token, but you could also have the euro as a payment token, which would then be a packed payment token. Then you have the larger group of utility tokens. That's basically the ICO wave, which is now materializing in the data. And here, that's our class, which is called EP22. These are, for example, access token, governance tokens, settlement tokens, ownership tokens, and so on. And finally, we have what we call investment tokens. Why did we call it investment tokens and not security tokens? Because we wanted to stay away from a clear legal perspective on this topic. We ask about the economic purpose. If you say it's security token, then you are implying that you are rooting this argument in one specific legislation, and therefore we wanted to stay away from one specific legislation and therefore ask about the economic purpose. And for this reason, we had to call it investment token. But new dimensions are being created these days. The dimension are then addressing, for example, the legal situation of one token in Germany or in Switzerland or in the US. They are largely congruent, so a security token is a security token nearly in every country, but you also have variations such that it's a security token, for example, potentially in Liechtenstein, but maybe a utility token elsewhere. But it mostly acts in perfect synchrony. Then the blue dimension, that's the technical setup. I explained it previously. You have first order blockchain networks which are maintaining an own computing infrastructure. That's Ethereum and Bitcoin. We call it a blockchain native token, and the class is TS41. And then you have second order cryptocurrencies which are more or less installed on top of the first order networks. These are, for example, the ERC20 tokens, or what the BaFin now accepted with the Bitbond security token. Yeah, so you have at this point of time two main classes with the technical setup. Then we have the red dimension, that's the legal claim. For example, you have tokens which do not have any legal claim, which is the Bitcoin. So outside the blockchain world, there is no claim for the Bitcoin. It's just the Bitcoin in itself. There is no collateral somewhere. Alternatively, for example, there are euro tokens, there are gold-backed tokens and other things, and these tokens, they have a collateral on the other side of the blockchain, so you would call it here, depending on the details, either a relative rights token or an absolute rights token. So what we did is, we have created this classification scheme. We also classified 800 assets, and what we also try to do is having a classification which is ready for the future, because at this point of time we don't know which of these classes are basically growing, such that you need to go much more into detail there. So this classification allows for a hierarchical solution. So once a specific class is getting too populated too much, we will be able to add another layer below, such that you can add more details on the lower level to have achieved the goal that one classification is not getting populated too much. Additionally, we already know that tokens cannot be classified in one specific single category. Rather, you have very often one token being part of multiple dimensions. So we also controlled for this and said we have, for example, a primary function for the economic purpose and a secondary function for the economic purpose, to also accommodate the fact that a token can be like multifaceted. For example, it can be an access token plus an ownership token. So there are various combinations out there, but you need to set it up in the right direction such that the categorization can grow later on without any conflicts. So for example, Bitcoin in this classification would be an unpacked payment token, that would be the class EP21D. It would be a native token with an own computing infrastructure, that's TS41. It's a no-claim token, there is no collateral, that's LC01, and it's basically in the area of payment systems and services from an industry perspective. Yeah, I don't go into details here, so now you can start doing some analytics. This is what we are doing these days and these weeks, because now, for example, we see in green up here that 75% of all tokens are utility tokens. Surprisingly, 5% of the tokens are investment tokens, even though they should not exist yet. Yeah, so what you see here is very nicely that actually they are formatted as utility tokens from a legal perspective, but if you look into it from an economic purpose, they are investment tokens. And I think these are the tokens where, for example, the SEC in the US is getting basically a little bit upset because smart lawyers were able to somehow package it as utility tokens, even though these are security tokens. But it's fascinating to observe reality and how it should be. Then on the right-hand side, you see in dark yellow the so-called native blockchain protocols. That's basically networks like Bitcoin, which operate and own, for example, mining infrastructure. That's 1/3 of all tokens. And then with 57% of all tokens being ERC20 tokens, this is nicely showing the ICO wave, which has passed in the last 2 years. If we, for example, dig a little bit deeper and ask for pegged payment tokens, that's basically the euro, the US dollar, and other projects out there, then right now we see approximately 10 tokens in our list. For example, there is, of course, the US dollar, multiply being replicated on top of blockchain-based networks, but also other things like, for example, early forms of the euro on blockchain networks and so on. In terms we are talking about security tokens, such as, for example, the Azhos token will be, then there are these tokens out there. They are, as I said, from a legal perspective, utility tokens, but they could have also been security tokens. So you see here, also, for example, matching what Marcel from Azhos said earlier. Of course, you have the Azhos token as a security token with Liechtenstein law, but in the future, you might also have single silos in the chemical industry being single assets with single tokens. As I explained, you could have higher level asset management smart contracts which are investing in low level single silo assets. So you see here there is quite some room out there in the future, so +5, +10 years on how to tokenize industrial assets. And as I said, with silos, it could also be machines and other assets. Yeah, to close, I would like to show this slide here. It's more or less 1 year old. Maybe you remember there has been some forth and back by him. Now they are all in, seemingly. Maybe not in Bitcoin, of course, but with other projects. Just found this slide a couple of days ago and wanted to remember him. And with this, I would like to close this short presentation and ask you also for questions, of course, if we have some time left. Yeah, any questions out there? Because, yes, please. Yeah, the question was, are stable coins the new masterpiece, something like this, the new gold standard? Actually, partly yes, but also partly no. First of all, there are, like, how people are calling stable tokens, this is quite chaotic these days. Some people call it euro-backed tokens, some people call it stable coins. Actually, in my personal opinion, in case you are installing the euro on top of Ethereum in an uncontrolled way, maybe you do not have anti-money laundering under control, then you could actually really call this stable coin. You could also call a gold-backed coin. You could also call this a stable coin. But what Azhos, for example, what they are doing, this is, in my mind, very simple. You simply call it euro. Yeah, what Azhos is doing, it's not a stable coin, it's simply the euro in my mind. The question is how you are organizing the IT infrastructure. They have a specific DLT network for this, but in my mind, you can of course also call it stable coin, but there would not be a need for this. You just simply call it euro. The reason for this is it's okay for the bank, it's licensed by the e-money license, it's made in a way such that the legal department of the banks are okay with it, and most important, it's the euro which you can use on any corporate invoices, and you can put it into the accounting department and compile an annual statement out of it. Therefore, I would simply call it euro, but of course, this word stablecoin also can make sense. One word about cryptocurrencies and Bitcoin, is there still need for it? In my mind, definitely yes. We also need gold, so Bitcoin to some degree can be argued to be similarly like gold, and there is room for such approaches. For example, in case you would like to be independent from governments. Yeah, there is some turmoil happening in the world currently, so people have good reasons to purchase gold. Maybe in 10 years they have good reasons to purchase Bitcoin. You never know. And what you should not underestimate at this point of time is are two dimensions where blockchain technology will happen, which is first of all developing countries. Yeah, with blockchain technology, you are creating one base layer for running business processes everywhere in the world. You simply need electricity and a network internet reception and a smartphone, for example. Then anybody in the world, even 2 billion financially excluded people, could start taking part in basic financial transaction, which could be so simple as sending your relative $100 in another country. You know, there are so many people. I've been to Dubai. We talked about it, right? You have quite many people from India and Pakistan working in Dubai. They need to transfer their money, and there are companies out there which are taking 10% away. So there are reasons why blockchain networks can really add values here, including cryptocurrencies, especially, as I said, in the area of developing countries and emerging countries. Especially in those countries where the government is not working or where it's not properly working. And another huge area which is currently just starting to emerge is the area of the economy of things. That's exactly what Azhos is doing. You have right now, I don't know, 7 or 8 billion people on the planet. We soon have more than 10 billion devices on the planet which are connected to the internet, and all these like dozens, billions of devices, at some point of time they will start participating in payment networks, and they will pay for services or do accounting like devices, you know, billions of devices. And I think for them you need to have a proper payment infrastructure, and this will happen definitely on blockchain and maybe to some degree also with cryptocurrencies, because it's independent from a specific legislation. Yeah. So I think it's very exciting, as same with Christian Labic. 2019 will be very, very exciting, and there is extremely strong place for enterprise solutions, but also you have definitely a big room for, say, 10 or 20 core cryptocurrencies, such as Bitcoin and Ethereum. I'm not really sure if we need 1,900 utility tokens, probably not, but there's, I think, good reasons to have, say, top 10, top 20 cryptocurrencies, such as Stellar, for example. Sorry for the long answer. Okay, perfect. Then I would propose we are having a break, the last one, and after the break we have the presentation of Simon Seiter from Commerzbank. They are doing the euro on blockchain, similarly like Julio Faura is doing, and then finally we close with a small discussion panel round. Yeah, thanks, and have a nice coffee.